Hey everyone, welcome to Tech Overdue. We've got a lot to cover today, so let's jump right in.
While many global markets are facing a ton of uncertainty, one of the most incredible financial stories of the year is actually unfolding in Sri Lanka. And it's the story of a stock market that isn't just recovering, it's absolutely roaring. I mean, just get a load of this number. A 25% gain since the beginning of the year. The main index there, the All-Share Price Index, or ASPI, it's been on an absolute tear, smashing all-time highs and catching the eye of investors all over the world. So you have to ask, what's really going on here? Is this a sustainable boom we're seeing, or is it a bubble that's just waiting to burst? Well, in this explainer, we're going to break down all the data and try to figure that out. Okay, so first, let's get a real feel for just how powerful this raging bull market has been. The momentum has been building up for months now, and it's created this kind of supercharged environment for investors. What's truly remarkable here is just how resilient the market has been. I mean, it took some hits. There was tariff news back in March and some geopolitical instability in June, but each time it just shook off the bad news and climbed even higher. And then a positive review from the IMF in July just poured more fuel on the fire, pushing the index to a brand new record of 20,800 by late August. So, what's the engine behind this incredible performance? Well, it's a powerful combination of positive economic factors, and they're all firing at once. Right here, you can see the four key pillars holding this whole market up. You've got solid GDP growth, you have interest rates that are so low it makes stocks look way more attractive than savings accounts, then you have companies posting really strong earnings, and finally, the continued stability that comes from the IMF program. It's basically a perfect storm for market growth. Think of it like this. Why would you keep your money in a savings account that's earning next to nothing when the stock market is offering this kind of huge growth potential? It's kind of a no-brainer. So what we're seeing is this massive flow of cash out of those low-yield assets and straight into stocks, and that's pushing the entire market higher. With all of this momentum, you have to wonder, where could the market go next? Well, the analysts over at First Capital Research have a very, very specific forecast. The target range everyone's watching now is 21,000 to 22,000. That's where analysts believe the market's fair value is for 2026, and that represents some serious potential upside from where we are today. And get this, the momentum is so strong right now that they think the market could actually hit that 2026 target before the end of 2025. That is a massive statement of confidence in this current bull run. Okay, so if you're an investor, how in the world do you navigate a market that's moving this fast? The research actually lays out a pretty clear phased approach. So the strategy has three phases. First, the analysts say to just ride the current wave through the rest of this year. Then, as the market starts getting closer to that 22,000 peak, it's probably a good idea to start taking some profits off the table. Lock in those gains. And finally, if it surges past that level, the recommendation is to shift into safer, more defensive types of assets. And just to really underline how confident they are right now, First Capital's current recommendation for funds that are purely dedicated to stocks is to be 100% invested, 0% in cash. That is an all-in stance, and it really shows they believe there's still a lot of room for this market to grow. But, of course, no market just goes up in a straight line forever. A smart investor always keeps an eye on the horizon for any potential storm clouds. This really illustrates the delicate balance the market's in. On one side, you've got these positive triggers, like stronger than expected GDP growth, that could push it even higher. But on the other side, you have some very serious risks. Uncertainty around the 2026 budget, a sudden spike in inflation, or any delays in IMF support could easily derail all this momentum and trigger a sharp correction. It's a really finely balanced picture. So before we wrap things up, with all this talk of indices and profit-taking, let's just quickly ground this whole discussion in the fundamentals. It's a quick refresher on the core things that make this entire market actually work. A share is simply a tiny piece of a company. When you buy one, you become a part owner, a shareholder, and you stand to gain if that company does well. It's as simple as that. And the Colombo Stock Exchange, or the CSE, that's the official marketplace where all these shares get bought and sold. Think of it as the regulated, transparent environment that makes all of this possible. Now, getting started might seem intimidating, but the process is really designed to be pretty accessible. As you can see, it follows a really clear path. You fill out the application, you give your documents to a stockbroker, they handle all the verification stuff, and your account is opened. Each step is really clearly defined. And all of that brings us to our final question. We've seen the incredible surge, the strong economic drivers, and the expert forecasts. But we've also seen the very real risks. So what do you think? Is this a golden moment for Sri Lankan markets? A truly once-in-a-generation opportunity? Or are these just the signs of a market that's overheating? A warning to proceed with caution? The answer to that is going to define the next chapter for investors all across the country.